The UK has the worst inflation in Western Europe. It's also higher than in Japan, Canada, and the US. That means the money you take home at the end of every month is worth less, and people are really feeling the pinch. Now, we already know we're in a cost of living crisis with things like energy and food prices affected by the war in Ukraine, and dare we say it, Brexit. The Chancellor, Jeremy Hunt, says his government has a plan to deal with it.
And if we're going to reduce that pressure on families, it's absolutely essential that we stick to that plan and we see it through so that we halve inflation this year, as the Prime Minister has promised.
But for now, we're going to have to suffer through what Mr Hunt himself admits could be a very difficult period. I'm Sally Lockwood, and on today's Sky News Daily, we're looking at what's making inflation so high, what it means for all of us, and crucially, when it may start to come down. To do that, I'm going to be talking to Sky's finance expert. But first, our business correspondent, Gurpreet Narwan, is with me. So Gurpreet, the UK has the highest inflation of any country in Western Europe, the highest of any country in the G7. Let's start with the very basics. Just outline exactly what inflation is.
So inflation is a measure of how quickly prices are rising in the economy. It's the rate of change rather than the price level. So when we say inflation is slowing, that doesn't mean that prices are coming down. That means they're just rising a bit more slowly than they were the previous month.
OK, so in light of that, why is inflation so much higher here, higher than any other country in Western Europe and any other country in the G7? Why is that?
So I think firstly, it's important to point out that we're not alone in suffering with inflation. Countries across the world are battling with inflation because a lot of the causes are out of our control. We know we're suffering from an energy crisis because of the war in Ukraine. We've also had harvest failures in parts of Europe, which is affecting our food supply. So we're all battling with inflation. But as you correctly pointed out, we're really facing the brunt of this. And that's partly because we do have some unique attributes that have exposed us to the crisis. We use a lot of gas to heat our homes in the UK versus other countries in the world, which means when wholesale gas prices leapt earlier in the year, we were really vulnerable to that. But that doesn't mean all of our problems are imported. We also have problems at home, and one of them is our really tight labour market. So after the pandemic, a lot of people left the world of work. A lot of migrants went home. Brexit, of course, didn't help with that. But we also have a lot of people who are too sick to work. And we have students who are prioritising their studies over working. Now, a tight labour market means employers have to pay higher wages in order to attract staff. And wage growth in the UK has been pretty robust. And when businesses have to put up wages, they then often put up prices to cover their increased costs. And so therein is the wage price spiral that economists like to talk about. There's some debate over whether we're really there yet, but it's certainly something that the Bank of England is repeatedly warning us about and goes some way to explaining why we're suffering from higher inflation than in other countries.
And why hasn't inflation gone down as much as some economists were predicting? It's still stubbornly above 10%, despite forecasts that it would drop down to single digits in March.
Yeah, economists are having some trouble forecasting inflation, and that's partly because of the big drivers in this are really volatile items like food and energy prices, and they can swing wildly from month to month. And that's why economists are really struggling to accurately forecast inflation. Based on that, I can tell you why inflation is higher than many thought. It's because food prices are still stubbornly high.
Why is food inflation so high? A lot of people asking if it's to do with Brexit.
Brexit certainly plays a part in it. There are a lot of reasons why food prices are high. Firstly, there's a supply problem. We've had harvest failures in parts of Spain and in Africa, which means we're struggling with our supply of fruit and vegetables. But also fertiliser costs and energy costs, which we rely on in the production of food, have been high for a really long time. Packaging costs are high, transport costs have been high. And that's partly, on the latter point, is partly because of problems at borders, which has been exacerbated by Brexit.
Now, of course, the government has pledged to halve inflation by the end of the year. So this won't be good news to them. But how is that looking in terms of a target?
Yeah, it's not good news for the government, which wants to really bring inflation down. It's made it its main policy aim. But most economists think that inflation is still on track to fall considerably. It also means that the Bank of England is probably going to act pretty aggressively to bring inflation down. We think that they're probably going to raise interest rates now next month. In the last few days, financial markets certainly weren't sure about whether the bank would move, but now it's looking like an almost dead cert that they're going to have to raise interest rates.
Now, you've already kind of touched on why raising interest rates helps with inflation. Could you just explain the mechanics of that for us?
Yeah, so policymakers raise interest rates because they want to dampen all the pressure in the economy, the inflationary pressure in the economy. When we don't have the supply to meet the demand in the economy, you want to stop people spending and you want them to start saving their money instead. So higher interest rates do that. They incentivize you to lock your money away and to not spend it. And they do that because it increases the cost of borrowing and incentivizes saving. So that's how interest rates work. That's how they dampen demand in the economy and hopefully dampen inflation. Now, there is some debate about how effective interest rates are when inflation is being driven by supply factors. So things like the energy crisis. It wasn't to do with too much demand in the economy. It was to do with something that interest rates don't really have much control over.
Something external.
Exactly. But there are signs in the UK that we do have this domestically generated inflation problem. So economists look at something called core inflation. That's when you strip away some of the external problems that we've been facing, like food and energy. And when we strip those away, we can see that inflation, the core inflation rate, is still at 6.2%. It's high, and economists this month thought it was going to come down. It didn't. That means that interest rates could be an effective tool and are an effective tool to dampen some of that inflationary pressure.
OK, Gurpreet, just wait there. We'll be back with you in a minute, but let's speak to co-founder of financial advice website Nous and Sky's household finance expert, Greg Marsh. Greg, thanks so much for joining us.
Thanks for having me.
Just what does it impact the most? I mean, the first thing that will spring to many people's minds is their mortgages, right?
Yeah, well, mortgages, unfortunately, as we know, are high. If anyone who's had to refinance recently or has, as you know, many hundreds of thousands of households do over the next 12 months, will have to refinance a fixed-rate mortgage. Today's news is not good for mortgage holders, indirectly, because higher inflation, or rather persistently, stubbornly high inflation, means that the Bank of England is likely to need to be more assertive in keeping interest rates higher for longer. The markets now are strongly predicting that the bank will raise interest rates next month, which means bad news for mortgage holders. I mean, the inflation thing, it hits all of us, and it hits all of us in different ways, but it really hits hardest those on the lowest incomes or on lower incomes, because particularly for folks who have less money to spend, the proportion of their household spending that is used up on things like energy and food in particular is much higher, which means that the really bad news today is not just that inflation isn't coming down as quickly as Andrew Bailey, the governor of the Bank of England, was hoping. It's the underlying story is one in which food inflation in particular is now at a 40-something year high. I mean, it's the highest it's ever been in my lifetime, for sure.
I mean, it's scary when you look at the figures, a 45-year high. We'll get on to food inflation in just a sec, Greg. But just on mortgages and for homeowners, obviously the majority of people are on a fixed rate mortgage. So you're only going to be affected if your mortgage is either coming up for renewal or you're one of a minority of homeowners who has a variable rate mortgage. Is that right?
Yes, that's right. If you're on a fixed rate deal today and that fixed rate deal doesn't expire for another 12 months, fingers crossed, by the time you need to refinance, interest rates will have come down from their current sort of relatively elevated levels. It's also, be clear, I mean, interest rates haven't risen today. It's just that the markets now expect that they will need to rise next month when the Bank of England Monetary Policy Committee meets and announces the new interest rate.
Now, it's not just homeowners, is it, Greg? High mortgages usually translates in higher rent as well, doesn't it?
It does. It indirectly feeds through, and that's exactly what we've been seeing. We've been seeing rents rising very sharply. Rents rising not only, of course, because of high mortgage rates, but also rents rising because of high energy bills. So landlords who, for instance, landlords aren't asking tenants to pay for their energy use, you're also going to see those costs filter through. And generally, landlords, like all the rest of us, are feeling the squeeze and seeking to pass on some of those costs where they can, as unfair as that feels if you are renting.
Right, now let's talk about food inflation, which is eye-wateringly high, a 45-year high last month, in fact. And this is the thing affecting many people the most, especially people on low incomes, Greg.
Food has dramatically increased in price. Put that in context. £100 weekly shop, not unusual for a family of four. That same basket of food today would cost £119. So it's almost a 20% increase over the last 12 months in food prices. And it's worse than that, particularly, again, for families at the lower end of the income spectrum, because the foods that have particularly increased in price, unfortunately, are the staples. I was looking at this earlier on. Olive oil has increased over just the last 12 months from a little over £4 for half a litre to something like £7 for half a litre. So that's almost a 2 times increase in the cost of something pretty basic to cook with. Of course, there are other kinds of oil, but they've also increased in price. Peppers have increased in price by more than twofold. Garden peas have increased in price, would you believe it, from about 88p for a kilo of frozen peas right the way up to more than £2. So that's nearly 2.5 times more expensive. So this is the really basic stuff that you've got to pull out of the fridge or the larder in order to feed your kids, has dramatically increased in price. And this is why, even behind the headline, this rising cost of food it's a really hard blow for hard-up families.
Yeah, as you say, we're not talking about luxury items. We are talking about the basics. I'm looking at a breakdown of costs here, Greg. Whole milk, a 4-pint carton, has gone up from £1.64 last year to £2.28 this year. Now, many families simply can't afford to pay 20% more for their food. Are we going to see food inflation chill out and come down anytime soon?
Well, the problem is that the Bank of England and government sources have every incentive to want to talk down inflation. They don't want us to expect inflation will remain high. Because, of course, if we expect it to remain high, inflation's a funny old thing. The more people expect it to remain high, the more it will. And so, yes, we can hope that inflation does start to come down, including food inflation, as the year progresses. But even if inflation starts to fall, prices won't. Inflation's not a measure of pricing. Inflation's a measure of the rate at which prices change. So even if food inflation were to halve by the end of the year from 20% to 10%, that doesn't mean that the cost of pasta is going to come down. That just means that the rate at which pasta increases in price is going to come down.
Right. So for people who are already struggling to afford their grocery shop, that's here to stay. They're not going to get lower prices in a few months' time once inflation reduces. These prices are already baked in.
These prices are baked in, and it's no surprise that you've seen the highest levels of food bank use for a generation. It's no surprise that families are cutting back on eating out less. And of course, that also has an effect on the real economy. That means that people buy less with their money because their money doesn't go as far as it used to. So all of this stuff compounds the risk that, as a whole, the economy doesn't grow as fast as, of course, the government wants it to, but businesses wants it to, and that could in turn lead to, losses in jobs and other things. So it's not good news. There's very little good news today. I do appreciate that the powers that be want us to look at the silver lining, and there is, as I say, there is light at the end of the tunnel in that food prices, energy prices probably will come down, or rate of increases, the rate of inflation will come down as the year goes on. But I just think we have to brace ourselves for an awful lot more pain and suffering before that happens.
OK, so Gurpreet, it all sounds a bit doom and gloom at the moment. But as Greg just said, there is a bit of hope that inflation could start to come down soon, right?
Well, we're already starting to see that because some of the external factors that we didn't have much control over, like the energy crisis, are starting to fade away now. Wholesale gas prices are now lower than they were before the war in Ukraine began in February last year. And that will filter through and has filtered through into lower motor fuel prices, for example. But also our energy bills, our household energy bills are going to start coming down now when the Ofgem's energy cap falls. So it's already starting to happen.
Okay, so that is some good news for people today. And how, I mean, you say that's already, impacting prices in terms of it being passed on to consumers. How soon are they going to really feel the benefits of that?
Well, there are a couple of mechanisms that are affecting our household energy bills. We have wholesale prices. We then also have the Ofgem price cap, which responds to those wholesale prices, changes in those wholesale prices to set the amount that energy companies can charge households. But we've also got the government's price guarantee, which is capping the amount that energy companies can charge. Taking all of that into consideration, we think around the summertime, June and July, we should start seeing a material drop in the amount that we're paying for our household energy bills.
Okay, Greg, I'm going to give you the final word before we go. Can you leave us with any positive news or at least some advice on how to weather this really difficult period?
There aren't magic bullets. There is some potentially good news coming through on the... so energy is a good example. We are now just beginning to see the first signs that cheaper energy tariffs are going to be introduced into the market. One large lender has already introduced them. You can actually, right now, save money on your energy if you know where to look. I run a business called Now.co. There might be ways you can save money on your energy using services like that. But beyond that, unfortunately, it's all the same advice, and much of it people have already followed, right? I mean, you can save money in your energy by using less of it, by heating your home less, but that's not much fun, and people have already taken those steps. You can save money on your food by shopping from a list, shopping at the end of the day, avoiding convenience stores, and buying own-brand lines, and all those sensible things. But, these are small beer, unfortunately, for most families that are hard up.
My thanks to Gurpreet Nalwan and Greg Marsh, and to you for listening to the Sky News Daily with me, Sally Lockwood. This episode was produced by Rosie Gillett. Our editor is Philly Beaumont.